Now, it's honestly sort of crazy to think about that just a matter of years ago, it feels like JEPI or the JP Morgan Equity Premium Income ETF was one of the only sort of premium income ETF focused ETFs out there that pretty much took the dividend community by storm and pretty much had us all bowing down to this ETF that offered exposure to the S&P, but with the use of options offered a lot more dividend income than a lot of us were previously receiving from normal stocks and ETFs. But fast forward a few years later, now there's other S&P 500 option income focused ETFs that pretty much feel like are popping up day after day, which has not necessarily made JEPI obsolete, but definitely less talked about in the dividend or income focused communities. Now for me personally, as you can see in my long-term portfolio, I've held on to over 1,200 shares of JEPI in my long-term portfolio now with an average cost of around $53 per share for several years, and these 1,200 plus shares of JEPI pay me north of $400 in dividends every single month. So clearly I personally am still sort of a fan of JEPI, but I wanted to make a video and talk about this ETF and share my thoughts about it, and if or if not it's potentially worth buying into, say in late 2024 or even for 2025. Now I definitely have some unique thoughts when it comes to this ETF, so you're definitely going to want to stick around until the end. So drop a like down below, subscribe for more content like this, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. So just to go over some basics about what this ETF even is and how it works, because there might be some new investors watching this video saying to me, well, I've heard about JEPI, but I don't necessarily know what this ETF is or how it generates so much income, etc. So the strategy, although back in the day seemed kind of crazy and complex, it's actually pretty simple, especially for those of us that trade options. It says seeking consistent premium income with lower volatility. It says JP Morgan Equity Premium Income ETF seeks to deliver monthly distributable income and equity market exposure with less volatility. The portfolio says this: defensive equity portfolio employs a time-tested bottom-up fundamental research process with stock selection based on our proprietary risk-adjusted stock rankings, but with this disciplined option overlay implements written out of the money S&P 500 index call options that seek to generate distributable monthly income. And before we go any further, I think it's fair that we talk about this first off. So there's lots of other ETFs out there now that do utilize a similar strategy, such as buying into the S&P 500, for example, and then writing options on the index. But the difference is that some of these different ETFs out there, like we're going to talk about later on, don't necessarily write out of the money cover calls. Some of them write at the money cover calls or in the money. And this is going to have a big change in outcome depending on what happens within the market. So what's so awesome about being an investor in, say, 2024 late or 2025 is there literally is so many ETFs out there now for us investors to get exposure to for a relatively cheap expense. Which brings me to JEPI's expense ratio. It's 0.35% is the expense ratio. And another thing funny about this, I remember years ago when I first started buying JEPI that this expense ratio seemed incredibly high, but now with more of these actively managed ETFs coming up across the market, 0.35% expense ratio doesn't seem crazy at all. So now that we have an idea about how this ETF works, you understand that it basically invests in the S&P and then through the use of options is able to generate a lot more income than otherwise. But what kind of income are we actually talking about? Well, right here on the website, the dividend schedule showcases that as of recent in November, we're talking 37 cents, 39 cents last month, 39 cents before then. Before those dividends a little bit earlier on in the year, we saw some very small payouts anywhere from 28 cents, 33 cents, 36, 32, 34, 30, etc., etc. Now you might be asking yourself, well, why does this ETF pay out a different amount every single month? It doesn't necessarily seek to have a target payout. It just depends on what happens within the time frame. So that might be a deal breaker for some of us, especially if we are trying to utilize higher yielding ETFs and or stocks to maybe live off later on, like I'm personally doing. This is sort of an annoying aspect about the ETF because later on in life, let's say I'm retired and I want to use all my dividends and distributions to pay for things like bills. If one month JEPI pays me 28 cents and the next month it pays me 39 cents, well, although I can of course do some saving and some shifting around with my cash balance, it'd be kind of nice if they did have a target amount that they were trying to seek to pay out investors, but that's just my 2 cents. Now looking at JEPI's performance on the max time frame, it is up over 20% and this is not including the payouts. So the ETF, although more of a premium income focused ETF, just like the name says, and because it writes an out of the money cover call, the ETF still has seen some upside, which is amazing. Because considering the cover call overlay, you're probably not going to see too much upside when it comes to ETFs with this strategy, which is again something we're going to talk a little bit more towards the end of the video. But still on the max time frame up 20% on the 1 year, up almost 12%, year to date up 9.2%. So if I'm going to be completely honest as far as my holdings go, my 1,200 shares of JEPI, I personally have been quite fond of the ETF so far. I mean, it's been trading up into the right slow and steadily, and also it pays me a decent yield somewhere anywhere from around 7% upwards to 9%, which is sort of low considering what JEPI has paid during certain times where there's been more volatility in the market, but still nothing really to complain about, especially if the ETF has also grown over time in price. And because I personally bought most of my shares of JEPI in the low 50s or upper 40s, my yield on cost is actually much higher than that, which is sort of awesome. Now, another interesting aspect about JEPI is that if an investor would have bought into JEPI back during inception, this was in 2020, with a $10,000 investment and then reinvested those dividends along the way over almost 4.5 years, this ETF's initial starting investment would have turned into around 17.7 thousand, or around 13.6% per year, or around 77% total return. So whether you like JEPI or whether you hate it, you can't really complain about an average return of around 13 or 14%, even with dividends being reinvested, at least if you ask me. Now, have there been other ETFs and stocks across the market that have done better than this over this time frame? Of course there have. But for a more income-focused investment, to give investors a lot more exposure, consistent income, honestly 12, 13, 14% on average return is nothing to complain about, at least in my eyes. So now lastly, you might be asking me, well, what do you think about JEPI moving forward, and would I personally buy shares of this ETF in 2024, late 2024, or early 2025? Now, even though I currently have around 1,218 shares of JEPI, I personally have not bought another single share of this ETF in a very, very long time. If anything at this point, I'm buying JEPI's brother or sister JEPQ, just because with that NASDAQ exposure, I think there's more upside, and along with that, more premium and volatility, which means the potential for more income too. Not to mention there's other NASDAQ 100 core premium income ETFs like JEPI IQ, one of my newer favorite ETFs that I've talked about on the channel before, that offer you very similar aspects of that of JEPI or JEPQ, but only do so even better in my opinion. Also, not to mention, if I want more S&P 500 exposure with the use of options, etc., I personally would definitely buy into SPYI, which is exactly what I've been doing over the last year, because I personally do want more S&P 500 exposure, but SPYI from NEOS does it a lot better than JEPI in my opinion. I mean, the distribution rate is much higher, it's more consistent, at least as of so far. This ETF pays out anywhere from 49 cents upwards to 55 cents every single month. And again, it's only been trading for a short amount of time, but it's been very consistent so far. Not only that, this ETF also buys and sells index options, which means there's more upside potential there too. So would I say JEPI's a worthwhile investment to buy into from here on out? I personally think that maybe / there's probably better options out there for S&P 500 exposure with the cover call overlay, but would I ever consider selling my shares of JEPI at this point? Honestly, probably not. And this is simply because this ETF, although maybe doesn't offer the biggest upside or the biggest total returns, it does have a track record so far, at least for several years, of paying dividends consistently somewhat and also growing in price over time, which has been great. And along with that, the fact that I bought into a lot of my shares of JEPI at a low cost basis, I'm probably going to be sitting on my shares for a while. So now that we went through the JP Morgan Equity Premium Income ETF, I shared with you guys how this ETF works, generally speaking, along with my personal thoughts on the ETF moving forward with the idea of whether or not it's a good investment, in my opinion. I lastly want to hear from you guys down below. Do you personally own any JEPI in your portfolios as of right now? And if so, how many shares do you have? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.